Hello, and welcome to episode 1 in our new podcast miniseries, Vertical SaaS, Fintech Disruption by 1,000 Cuts. This series is sponsored by the good folks at Pipe, and I personally feel like it couldn't be a better time to dig into this topic. Software operating systems are being built for companies in every industry. And these vertical SaaS platforms are experiencing tremendous growth because they help small business owners address the specific challenges unique to their industries. Now, the reason that these vertical SaaS companies are essential to understand for those of us working in fintech is that they become the perfect distribution channel for financial services products, everything from payments and banking to lending and insurance. And this isn't theoretical, this is happening right now and at a scale that would likely surprise you. So, the purpose of this series is to pull back the curtain on this world. Over the next 6 episodes, you're going to learn how vertical SaaS companies work, from defining a strategy to choosing partners to launching products and scaling responsibly. In today's episode, I'm joined by Pipe CEO Luke Voiles. We talk about the emergence of vertical SaaS, its success as a category versus horizontal solution providers like Intuit and Square, and the opportunities it is creating to put the right financial products and services in the hands of small business owners at the exact right times in their day-to-day workflows. Now, as you'll hear from our conversation, Luke has a ridiculously deep background in this specific space and a really sharp perspective on where everything is headed next. In fact, after today's episode, Luke is going to be joining me as a co-host for the remainder of this series, where we're going to sit down with actual vertical SaaS operators. I can't wait for you to listen. So without further ado, here is my conversation with Luke Voiles, CEO of Pipe. Luke, thank you for joining me.
Oh, thanks for having me. It's going to be fun. I'm excited about this.
I am very excited about this. You and I think, are both sort of nerds a little bit when it comes to vertical SaaS and embedded finance, topics I know you've spent a large portion of your career working on and observing and getting to dig deeper into. So obviously, we're going to talk about all of those topics. We're going to sort of preview, in some senses, the series that folks are going to get to listen to over the next 6 episodes. But before we get into any of that, I would love it if you could give a little bit of a deeper dive into your background, how you ended up at Pipe, and just kind of really the context for why we're doing this series.
Sure. So I'll go do it forward. I usually do it in reverse order. I'll do it in forward order this time. After grad school, I went into investing. So I was a distressed credit. Well, I actually started out as like the par healthcare analyst at a CLO fund. And then the credit crisis happened, and then immediately pivoted to the distressed credit team. And then that fund actually blew up. By the way,
Yeah.
It had $4 billion in credit hedge fund and like 30 billion plus of CLO, but those credit hedge funds blew up completely, and they didn't give money back to some of the investors. That's how bad the crisis was. But from there, I ended up going to another distressed fund in Texas, and then ended up getting hired and moved to California 15 years ago now, I guess. So TPG Capital, actually Sixth Street Partners, when it was part of TPG Capital, hired me out here. So I moved out to San Francisco with, at the time, 1 kid and 1 on the way. And we ended up landing in Marin here. But I spent 5 years at TPG buying bad risk from banks for the most part. Every type of risk you can imagine I've seen. Like we bought life insurance policies at one point, but every type of MCA or factoring or small business loan, consumer lending, asset backed, not any future predictable cash flow stream you can put a bid on and try to calculate an IRR. So I learned a lot about investing there. But then I made a massive career shift when Alex Chris, actually, so he's the CEO at PayPal now, he recruited me from Sixth Street to help build QuickBooks Capital. I had been trying to lend money to lenders for the last kind of 18 months I was at TPG. So On Deck, Fundbox, Bluevine, Funding Circle, Lending Club, Prosper, all those names. Ron Suber came into the TPG offices to talk to me about the new healthcare thing Prosper was working on, for example. And so had been in and around the sort of the specialty finance space is what we called it when we were in like investing. And so just started asking Alex about like, what do you guys have there at this QuickBooks? He's like, well, we have like 4 million small businesses. They send $2 trillion a year of invoices. I'm like, holy crap. Like, that's insane. Like, you have the customers, you have the data, you should go build a lending business.
Sure.
And so he recruited me to actually go do that. So like Rania and I partnered to go build QuickBooks Capital. And we went from 0 to 2.7 billion a year in volume over a few year period, right? Like that business is hundreds of millions of dollars of revenue now for Intuit, which is pretty amazing. It's like, that's like Intuit, like the horizontal. We'll talk more about horizontal versus vertical, I'm sure, in a minute. But like Intuit was a big horizontal on the accounting side, right? And built an amazing embedded fintech business, like with payments and capital and invoicing and all that stuff. I was at Intuit 5 years, learned so much about leadership and customer focus, like Scott Cook, customer focused stories, like follow me homes. Like, can I literally come to your house and watch you install that shrink wrapped copy of 3.5-inch floppies of the Quicken software and see how you connect your bank accounts? Like that deep customer research, like is infused through Intuit, and like many product organizations now do very similar stuff based on what Intuit had been doing for years. But I learned a ton about mission-based leadership, purpose-based leadership. Like I drank the Kool-Aid, like watching Brad Smith, like bring tears to people's eyes, talking about customer stories, like 8,000 people. It's just amazing. Right. And so you get excited about helping small businesses succeed when you work at a place like that. So I was super lucky to go from sharp elbowed private equity to like an Intuit that actually really cares about their customers. Like it took me a year to stop wearing a collared shirt, like button down collared shirt. Like, but I've completely over that now, but that was my Intuit experience. And then like, in order to get like true GM type experience, I got lucky to find a role at Square where after Jackie Reeses left, they moved the capital business under Alyssa Henry, put it together with a debit card, checking account, savings, instant transfer, and called it Square Banking. Right. And they brought me in to lead that business. So I was the single threaded GM of that business, like 4 or 5 geographies, multi-product, truly single threaded. Like that was an amazing experience. It's like a 40% growth business, like helping Square really drive growth. But I learned a lot about how to build stuff fast, or I thought it was fast when I was at Square. And so like learned a lot about product velocity, like how to set up squads and like Amazon style, like single threaded leadership, learned a lot about that. So, and then the pipe opportunity came along. So the founders had like amazing vision to like create this thing where small businesses could sell their future revenue on an exchange. Right. And so we haven't really changed the overall vision. It's the how has changed, right? Like I've been here 2.5 years now, and we basically kind of took what I knew best and took what they started to work on the embedded side and just like stepped on the gas, which is take a Square Capital or Stripe Capital or PayPal working capital type model and then plug it into a new distribution channel. Right. And so like being at Square, seeing what Pipe had and the infrastructure they'd built and the amazing team they had. And like, for me to be able to like walk from Square to Pipe and say, you know what, like I know exactly what we can build and exactly how to get distribution, like recruit some amazing executives to go make it happen. So it's just one of those, like timing matters. Like I was at a point where I felt like had learned enough to be able to take a swing like this. And then they needed someone kind of just like me to go do it. Like I have credit background, tech background, like you need both to actually do well in a space like this. And so it all kind of just fell into place. And so it's like it's been awesome the last 2.5 years here. My exec team's amazing. They're friends that I've worked with in the past. And we come to work to help small businesses every day. Right.
So that's a great origin story. And, you know, I will say from the outside, watching these things, you can really tell when like there's a perfect fit with these kind of things, because you just see like almost instant alignment. And like, as you said, stepping on the gas is the right metaphor, because like, as soon as you got to Pipe, it was room. We are going in this direction. I know how to do this. This fits with the larger mission of the company and what we've been building to date. And what I wanted to get into is the new distribution channel, right? Because if we contrast your experience at Intuit and even your experience at Square with this distribution channel that you're now focused on at Pipe, to me, that's one of the biggest things that's changed in the world broadly, in the world of software, and specifically in the world of software focused on serving small businesses, right? Which is, you reference the idea of horizontal versus vertical. For a long time, and correct me if I'm getting this wrong or if you have a different perspective on it, but from my vantage point, I think we always just sort of thought historically, like, oh, there's just software that's built for small businesses, right? Like there's accounting software that's built for small businesses. There's, invoicing, there's payroll, there's just all these like products that we're going to build specifically for small businesses. And the way you thought about go to market was, am I going to serve small businesses? Am I going to serve medium-sized businesses? Am I going to serve enterprise businesses? But it was a pretty, I would say, sort of unnuanced approach to looking at how to build the best software for companies that are different from each other. And to me, the flourishing that we've seen in the small business software space over the last, what would you say, 10, 15 years, something in that range, is vertical SaaS, vertical software for small businesses. So can you define for us what vertical SaaS is? Because that really is the core of what we're going to be exploring in this series.
Yeah, I mean, I'll give you the quick answer and then like a longer wind up of the history of how we got to that too, right? Which is,
Please.
for me, it's about the customer and the tasks. Like, what tasks does a business owner need to complete every single day to manage their business? Mm-hmm. If you're a nail salon, it is, you're booking appointments first. I need somebody to come sit in the seat and get like treatment done or hair done or whatever it is, or nails done. You have to book the appointments. You have to track those appointments. You have to then take payment when they come in. You have to manage your inventory. You have to manage your e-com store. All these things you have to do. Like, got an invoice, got to pay that invoice, got to pay your payroll, all the things you just mentioned. Like all of these things come together and you say, okay, is there a world where a single software can actually do all of those things for a specific business type or industry? That to me is what SaaS vertical is. Like Boulevard on nail salons, House Call Pro on plumbers and electricians, right? Like go back, like Toast for restaurants, Slice for pizza shops is even more narrow, right? Like that is the future of this. And so what's happened over time, like I mean, the other part of this is the payments component, right? The old payments world was ISOs, like independent sales organizations running around trying to sell Elevon or some other device in the background where you have literally just a terminal and it can swipe a credit card. Maybe it links to a POS system. Maybe it doesn't, like an old cash drawer. And you get a monthly PDF statement. That says the payments that you processed that month and what you had to pay and what you got, right? Like there was like, it's just a separate thing that like helps you accept credit cards or take cash or whatever. All of that now has been like added into the SaaS vertical piece too. That was the first thing that got embedded because that's the first thing you have to do. Like I just
every business
did
needs
the nails.
To accept payments. Yeah.
Like I just did the nails. I got to get paid. And like, so to be able to swipe a card, and that's what Square was so amazing at, right? Like they give you a terminal, super simple, or even a phone with a dongle that lets you do it. Now just tap to pay. You don't really need anything else, but that's not SaaS vertical. Like that's just a horizontal payments acceptance thing. And yes, it was amazing for Square to get word of mouth growth to get to like, I don't know, 10% of retail locations in the US using Square terminal. That's amazing. But they're getting beat. Like Heartland on the old terminal side, on the restaurant side, is getting smoked by a Toast because they actually do all the stuff, right, that you need to do. The payments ISOs are having to start selling more SaaS vertical stuff because they can't compete with it with regular old payments businesses. And so those two things came together over time. But then if you rewind back even farther, if you were a small business and you wanted to start a business, many people had to go become a franchise, right? Because the franchise or become a franchisee, the franchise would have the whole playbook for you. Here's the software that we built specially you can use for this thing, like a Subway shop. We'll deliver the food for you. We're going to pay us like a huge percentage of all the revenue you're making in order to go run this business, but we make it easy for you because we have the whole concept done. This is what SaaS vertical is now displacing, right? If you want to go launch a restaurant now, you can use Spot On or something else to go turn it on, make it work, have the hard part of the management of the business is done. You can go focus on the food, right? And so like, I think it like starts to pull things away from franchise to like empower these small businesses to go do stuff and build stuff, right? And become more vertical. I think one other like part here is like the Service Titan and the big businesses that would go roll up these large, like they have a software for the larger roll-ups, like you talk about enterprise and super small, a private equity fund could use the Service Titan software and go roll up a bunch of HVAC businesses and have this big thing. Now, one person can literally go buy an HVAC business, put it on a House Call Pro, go run the whole thing, and like actually go compete with the big boys for the first time and start to build businesses to help people. And so all of these shifts happen over time. And now we're getting to a place where the SaaS vertical stuff just makes it so easy for one person to do everything. And then you take pipes and financial services offering and plug it all in, and you can solve all of those problems, right? That's why I'm so excited about SaaS vertical, because the business owners don't need to use 20 different softwares anymore, right? Like I was just talking to a guy who's doing a roll up, a guy I used to work with is doing a roll up of marinas. And we started talking about his business, and it's like, okay, you have a rental business for like RVs and places to park RVs. You have slips for long-term rentals. You have a mechanic software to go fix boats. You have like a retail shop. You need a retail. Like there's so many other things that are even more complicated, these things that like software just can't handle yet. And we're just at the very beginning of the shift away from ISO to vertical and from horizontal to vertical, right? Like accounting is going to get embedded and Intuit's going to have a problem, right? Square is not going to be able to compete with the verticalization of this stuff, because they'll end up being like Stripe in the background at best, because they're never going to be able to do 100 verticals at once, right?
So it's really interesting the way you describe it. And I would almost think about it, to add to your description, because I think it's really a good way of thinking about the evolution of this, as kind of sitting on a continuum, right? So on one end of the continuum, there was horizontal, and at least in the early days, kind of unintegrated components, right? So like you're a small business owner, you want to start running your business, you need 20 different things. You need invoicing, you need accounting, you need payments, you need payroll, you need just all of these different things to run your business, inventory management, sales and marketing, e-commerce, blah, 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 blah. So there were horizontal solution providers that would be sort of best in class, so to speak, for each one of those horizontal layers, right? There's best in class accounting, and that was probably Intuit. There's best in class e-commerce, there's best in class, each one of those different pieces, and those pieces evolve, right? Like new competitors come into those spaces. Those horizontal layers are competitive with each other. I think over time, and Intuit's a good example of this, those horizontal service providers have tried to verticalize their own approach, right? Where they're trying to do more than one job, because to your earlier point, small business owners want as much stuff conveniently as possible. And the psychology of small business owners is really important here, right? In my newsletter in the past, I've written about small business owners as being somewhat comparable to like new parents, where you're just in this constant state of paranoia about keeping your baby alive. And it's not really super healthy. It induces a lot of anxiety. It doesn't always lead to great decision making. I remember when my first son was born, spending like $900 on Amazon that first night after we brought him home. Because I'm like, he might need this. He's not sleeping this way. Like, we might need to do this. Like, I wasn't making rational decisions. That's small business owners, right? Like they are stressed. They don't have any time. They don't always make rational decisions. So you want to bundle stuff. And so we see some bundling over time in those different horizontal layers. And then on the other end of the continuum, there's the hyper-specific franchise model, right? Which is, look, we're going to take all that stress away for you running this very specific business. We are going to give you a brand. We're going to give you a menu. We are going to give you napkins that have our logo on them. We're going to give you the software that you use to run your business. We're going to give you the payment terminal. We're going to give you everything, a business in a box, as one of my old colleagues described it. And that is obviously hyper specific to the business. This entrepreneur is really just someone executing someone else's business, but it's a business in a box, and it does make entrepreneurship and running a small business much easier. If those are the two sides of the continuum, what I hear you describing with vertical SaaS, and tell me if I'm getting this roughly correct, is the vertical SaaS sits in the middle between those two ends of the continuum. It is vertically specific, meaning that unlike an Intuit or unlike a Square or unlike Shopify or whomever, what they are offering is something that is tailored to the unique needs of a specific business. And one of the things we're going to explore over the course of this series is how different businesses in different verticals are, right? An HVAC installer is completely different in the way they run their business day to day than a pizza shop, which is completely different than a nail salon, which is completely different from a law firm, right? They're all small businesses, but they could not be more different in the way that they are run. And so software and the workflows that software can help automate and streamline and make better are very unique to different verticals, or even different sub-verticals within a vertical, right? To your point about Toast, which is for restaurants, versus Slice, which is for pizzerias specifically. Then, at the same time, they are empowering those individual small business owners and giving them the ability to say, hey, look, we want you to do what you do best, right? You have an idea for a pizza shop in your town that's based on your vision and your idea of what a menu can be. We are not trying to make everyone Domino's or Pizza Hut. We are trying to enable the flourishing of individual small businesses. So the reason I'm trying to describe this and trying to do it in a very passionate way is I think it really does fill a specific gap that has existed in the market in terms of enabling entrepreneurship that just hasn't existed before. I mean, I'm trying to rack my brain, like this model, this thing that sits in the middle of the continuum, this is a new thing.
It's super interesting because if you think about a business owner that wants to go start like a Subway shop, let's just use that, like a sandwich shop, right? Like you have to pay up front to the franchise or to actually get an entry in the door to make it happen. Like
you have to, it's capital up front, right? It's a franchise fee. Yeah.
It's like $500,000 or even more now probably to open one McDonald's location, right?
Totally.
And you get preference. And so it's just a hard thing to even break into. You could take a swing on some other unknown franchise, but that's scary.
Yeah.
But like when you think about the cost of this vertical software being like $50 or $100 a month on the cheapest layers, like super cheap. And you have the idea, you know what you want to go do. It just allows access to entrepreneurship like nothing else before. And the hard parts about managing the business and not needing to hire 4 people to make sense of the 15 tools you're using, you could do it by yourself. Like one person can actually manage all this stuff if you automate it all the right way and the SaaS vertical software works the right way. It's way easier to open a nail salon when you have Boulevard. Right? Because everything's happening in the background. Like everything's like tracking and automated and you can feel like it just makes it so much easier. And so the software itself is enabling entrepreneurship in a way that we've never seen before too. It's awesome. Right.
I completely agree. And I think one of the other things that's really interesting about this area, and you just don't know this until you work in the small business arena. So obviously you have a ton of experience doing this. Luke, there are a lot of small businesses out there. They are constantly being born. They are constantly dying. They are constantly pivoting because they all work in different areas. It's not like they all hang out in the same places. And the reason I mention all of this is one of the core challenges, and this relates specifically to your guys' approach for distribution, it's really hard to acquire small businesses, right? It is really, really, really difficult and expensive to acquire small businesses. In fact, my observation of the space is that until you get to be an Intuit size or a PayPal size or a Square size, and you sort of just have the brand where a brand new entrepreneur who just wakes up one day and decides to start a business, what are the 3 names they're going to just know in their head before they've done any research? Like until you get to that level where your brand is pulling new entrepreneurs to you, it's incredibly expensive and difficult to acquire new small businesses, except if you are doing vertical SaaS the right way, in which case you have the benefits of product-led growth. Can you give us a little insight into, like, from an acquisition perspective, why vertical SaaS is so successful?
I think the success of Square is a good example, right? Like everyone needs a certain wedge, right, to help a small business succeed. Square's amazing, like dongle that let anyone just accept payments with their phone at the farmer's market. Right, was it. And so like one farmer's market person would see another person accepting card. Like, that's
and they'd
amazing.
Be like, how the hell are you doing that? Right. I remember those days. Yeah, like they were literally like, how are you doing this?
That is word of mouth growth.
Yeah.
Right. Like the Slice story is very similar. Like you go, like the pizza shop owners are a group that go to industry conferences to see what helps with businesses. And they go and they talk to one of their buddies that also owns a pizza shop. It's like, yeah, I'm using this software called Slice and it's magic. Right. So you like, because I do all of the, it's not just, I'm just accepting a card. I'm doing everything. And you also get that amazing word of mouth growth, like showing up at the industry conferences, like making folks aware, and like your customers become your biggest advocates because it just works. And if you always focus like Scott Cook style on the end-to-end customer pain points of those specific industries, that's how you drive product-led growth, because you get the owners of those businesses to tell their friends that also own businesses that you should be using this because it saves me so much time. And you just grow. And so it's like it's just a magical like kind of flywheel that helps grow. So vertical SaaS is able to actually scale going direct because they save these businesses so much time. The financial services side for example, does not, like, all of the go direct to like the on decks of the world, trying to go direct to small business and like buy the AdWords, like that's
It's
an
really
impossible
hard.
treadmill.
It's
Treadmill. And
it's a
so,
game you just don't want to play. Yeah.
right. And so Pipe doesn't do that. Like
Right.
we are writing we are writing the success of the partners, or like using the success of the partners' word of mouth growth to enable them to offer these financial services features, because they've already solved pain points. They already got the word of mouth growth. They have 100,000 small businesses using it.
Mm-hmm.
And then boom, you can turn on capital, you can turn on card, you can turn on bill pay. Like it's a great fit for us to like partner with these folks that are getting that word of mouth growth. Like that is product led growth from my perspective. It solves so many problems. People just talk about it, and it just grows that way, right?
No, I totally agree. And it is a really interesting point, because you have to have a certain awareness about, are you the type of product, are you offering the type of product that these end customers, these end users are going to seek out? Or are you the type of product that needs to be built into products that those users are going to seek out? And I think, to be totally fair and to be a little self-critical of our industry, I think it's taken financial services a long time to figure out, not every time is our product the wedge that people really want and need and are going to seek out. But when you have that product, and I've spoken to enough vertical SaaS folks over the years, and we're going to talk to a bunch more over the course of this series, which I'm so excited about. That's the story you constantly hear, is they're like, we can't even stop the growth. Like, we're not even really doing anything. We're just like, we built this thing, and like our customers will like go out of their way to tell their peers or to tell others in the space, this is what we use. They'll like demo it for us. Like, that's how excited they are to have something. And this is going to be a theme across all of our episodes, to have something that just feels that last 10% like it was built for you. And again, you use the word magic. When we talk about magic in software, it's really that feeling of you pick something up and every part of the software understands you and your workflows and what you do on a day-to-day basis. And like the difference between that and very good software that's not that is everything. It doesn't seem like it is, but it is. And that's like really the difference with vertical SaaS.
It just has to be intuitive too. Like that's the thing that people don't realize. If you can't just look at the screen and know exactly what you're supposed to do, the software's no good. Like if you have to explain somebody how to use it, that's nonsense. Like that's why you do rapid prototyping and testing with customers to say, hey, does this make sense? The very first time they see it, like, can you tell what you're supposed to do here? Totally. And you keep iterating until you get to the place where like, yeah, it's obvious. And then it's just natural. Like you don't need training. You just start using it, and it is so intuitive. You just use it. Like that's the best kind of software, right?
It's just an extension really of like how you think about running your business. So the other thing I want to ask you about before we get even deeper into the embedded finance stuff, which I am personally super curious about and will be a recurring theme across the series. Last thing I wanted to ask you about on vertical SaaS is, how do you think about the market, right? Because I think I've heard from other investors, from other observers, that like vertical SaaS is cute, but it's probably not a trend that's going to like sustain or sort of last for a long time, right? And it seems to me to be a very particular sort of philosophical viewpoint that looks at the world that way, right? Where it's like everything needs to scale up, everything needs to be massive, everything needs to serve the broadest possible total addressable market, right? Like if your TAM is not this, then you're not like even worth investing in or caring about. I don't share that viewpoint naturally. And as I look at vertical SaaS specifically, I think that's sort of a misreading of the market. But when you explain Pipe's strategy to partner with these companies and to sort of like, really kind of harness the growth and the traction that vertical SaaS is getting, how do you describe that question?
Yeah, I mean, like, let's just use US numbers. Like, ignore the global opportunity for a second, because it's way bigger.
Yeah.
With just US numbers, there's 35 million small businesses now, like 34.8, I think, from like July of 24. Of those 35 million businesses, 28.5 million, or 82% of them, don't have any employees. They are sole props. They are individuals running their business, right? That is a massive kind of untouched market. Number one, from like a software perspective, yeah, they may be using a QuickBooks in the background and paying $40 a month, but like vertical is growing way faster than like 50% faster than the other horizontal software, because it's just the avalanche is starting to happen. People are shifting over. They're hearing how good it is, and it's just growing rapidly. It was like 400 like PayFac SaaS verticals now, payment facilitator, like they're accepting payments. There's going to be 4,000 of them in the next 5 years. And so, yeah, you think about like one small niche thing, but like think about nail salon just for a second. Like walk down your main street. Like next time you walk down your I live in Larkspur. We have like one street, Magnolia Avenue, and you walk down the street and it is retail, nail salon, hair salon, restaurant, repeat. And like every town has hundreds of these, and across the whole country, there's so many retail locations. Then you think about, okay, accountants and lawyers and plumbers and electricians, like all the stuff that goes into the services that need to run the economy. Like these 28.5 million people are those businesses. They don't have access to capital. Like there are some very large, like vertical, like industries that are massive, right? Like service-based alone, like accounting alone is an enormous industry that should be automated and should have more verticalization, right? Financial services, like let's talk about that in a minute, but financial services, like 7.2 trillion of potential TAM around the world, right? And like 500 billion, like serviceable, addressable for pipe. Like the numbers on the financial services side are so enormous that when you take the number of small businesses and sole props that are in the US, all of these verticals, and you don't have to just focus on one. Like Boulevard has done so well with med spa. Like most of their growth is coming from that. And that's an ancillary thing. The task, like the core task of appointments, right? And of taking payments, like there is major overlap between a bunch of different verticals where if you nail the appointment experience and have the best one, it's faster than to build the other stuff on top to serve 3 or 4 verticals at once, or 5, or all the ancillary ones. And so you may think the TAM initially is small for one vertical, but they can do ancillary stuff. Gyms and daycares are close enough, right? From a management perspective. It's like there's all these things where folks can manage both of those things at the same time. And so given the enormous size of the number of like sole prop and small businesses, the number of vertical software exploding and the growth exploding, plus bringing financial services TAM into that, the opportunity is enormous, like way bigger than people think.
I agree with you. And I will also say that, again, the core thing you always want to anchor to when you're looking at any of these markets is if customers have the freedom of choice, right? And small business owners are the best example of like, they'll just pick what's going to work best for them, what's going to get them back to the art of like running their business and the craft that they actually want to spend their time on. You want to anchor yourself on what the best offering is, what the best product is, right? And like vertical SaaS just kicks the ass of everything else that it goes up against because it's so tailored to that segment. And then to your point, there is surprising overlap between related and sometimes like less obviously related segments based on the underlying workflows and tasks that they're taking. So let's talk about embedded finance specifically within this world. You talk to anyone who's worked in banking, in finance, who's tried to serve small businesses, and they will tell you a similar story to what we've been talking about, which is small businesses are a nightmare to serve if you're a bank, right? They are just incredibly difficult. This is why most banks tend to orient what they're doing either to consumers who are small and difficult to get individually, but, and let's be honest, consumers are actually much more all the same than we like to pretend,
it's
right?
Like one industry.
It is one industry. We're one big group. We're one big herd of cattle. And like, it's actually not that hard from an acquisition perspective, from an underwriting perspective. Like we are homogenous, right? Whether we like to think that or not, that is true. And then on the other end of the continuum, if you're going to serve businesses and you're a bank and you're trying to reach out to them directly, commercial is the way to go, right? Like bigger deals, bigger companies, more revenue. And if you have to dedicate the time to taking a bespoke approach to serving them, you might as well serve the biggest version of that possible so you can make as much revenue as possible. Small business ends up getting kind of caught in the middle. It's this sort of no man's land. That's why it's never really been well served. Walk us through the embedded finance opportunity to serve small businesses that's been unlocked by Vertical SaaS.
I think you described it well. Like from a bank's perspective, like pipe is a financial services, right?
Yeah.
If you go through, it's all of the money in, it's going to be all of the money in, all of the money out, every single transaction, right? To allow us to help like make sense of all of it, but also like payments, payroll, paying invoices, getting paid through card or invoice sending, all that stuff. Like once you start to build all those things, like those are all the things you need to do to go help that small business succeed. The banks may have a partnership with an ADP or something that say, hey, you can use this if you want, but it's on the side. And like, we only actually, like the definition of small business for JP Morgan Chase is 50 million in revenue and up. right? Like 50 to 200 is small business for them. Like that's because they cannot serve anything smaller because it's all manual and they don't have software and it's just hard to underwrite. And they need audited financial statements and tax returns for multiple years. Like there's like banks just don't do it well. The community banks can, but they've had a long-term relationship with these businesses, right? Like local attorneys and like doctors or whatever that like are running these businesses. And again, there's no software or automation, right? And so all of the themes we talked about on the SaaS vertical side, where the business owners go to solve their pain points, these business owners also do not go into the bank anymore. Many of them don't accept cash and don't have a reason to go deposit the cash and get the change for the next day. And there's no point at which those banks can cross sell anymore, right, to that customer. There's no relationship manager like playing golf with the other business folks with the Rotary Club.
Right.
It's like they just don't need to go into the bank anymore, right? And it's female immigrant like nail salon owners with no FICO scores that have kick-ass businesses that are just growing so fast that are just not even on the radar of the banks, right? Just given the old boy network style of it, right? And so like if you think about these two themes, then the banks aren't doing well, the business owners aren't going into the banks. And so it literally just take all of those financial services and put them into the product. And that's where it becomes magical. When a Boulevard customer can see, or like a House Call Pro customer can go pay their bills with capital, they can pay their payroll with capital. It's a security blanket that's always present, following them around. They can click once to draw the money to go spend it if they need it. It just becomes this amazing, completely frictionless experience where you don't have to go spend 6 weeks applying for a loan with paper documentation at a bank where they're going to decline you anyways because you don't have a credit score. Right. It's just because we're able to serve these micro merchant populations using just cash flow data, right? That opens up the risk because we're fully automated from a risk underwriting perspective, because we have automation on KYC, KYB. We can onboard customers for like $10, right? And it's just, the banks just can't do that. They still can't do that. And so it's pretty magical to like bring all of the embedded financial services experiences into the product where they're running their business, and they just click a button and payroll happens. They just click a button and capital comes in. They can go buy the oven they need. It's just you merge together these two themes, the SaaS vertical stuff we talked about, and then the banks just not being able to do the stuff in an automated way or integrate with SaaS vertical at all. And so Fintech then is the bridge that's bringing financial services into the SaaS vertical. We still need bank partners in the background on most of this stuff, right? And so we're this bridge that's bringing it all in, and like it's going to be the future of how small businesses do everything from a financial services perspective. From my perspective, it's just like it just makes sense, right?
I agree with that. And I think that, to add on to it a little bit, one of the things that's really important, I think, to understand about how you serve these small businesses is, there is just a level of automation that's necessary to be able to make money doing this. And, it's interesting because if you survey small business owners, and there's been lots of research done on small business owners, they're one of the best sort of surveyed groups out there because from a policy perspective, it's very important, especially in the US, that like entrepreneurship and small businesses continue to thrive. So
that's what drives GDP. That's what drives jobs. Like that's everything.
It absolutely
for the US.
Is. Yeah. Right. I mean, it underpins our entire economy. And so, when you survey these small business owners and you ask them about these questions, I mean, first, and this, and we're going to talk about this over the course of the series, they always tell you access to capital. Like it's like the lifeblood of a small business. We have to have it. But it's interesting when you dig into the psychology behind why and how they try to solve that problem, right? To your point about going into the branch, if there's any other option, a small business owner will not go into the branch. And it's not, I don't think, so much a reflection of, at least in all cases, their lack of faith that they might be able to get something good from the bank if they went into the branch. It really, from my perspective, returns to that idea that small business owners are stressed. They are new parents. They don't have any time. Like, think about like your one-person pizza shop. Like that person is doing everything. They are making the dough. They are rolling out the pizzas. They are taking payments. Like they are doing literally everything to run that business. They get home at 10 o'clock at night, and then they're going through invoices and they're balancing the books. Like, I mean, they don't have time to go into a bank and do the like, well, how are you? Let's sit down. Let's talk. Like you can imagine a small business owner losing their mind going like, time is money, man. I don't have time to do that. And so before vertical SaaS really came onto the scene, and we've referenced some of these companies before, the on decks of the world, they were a better answer from a convenience perspective to small business owners, right? Because they could say, look, you don't have to come into a branch. We can automate this. It's digitized. It can be fast. But the problem is that, and we've talked about this, those platforms don't have a natural right to win in acquiring these customers. They don't have a natural ability to gather data about those customers. They don't know anything about those customers because this is the first time that they're interacting with them. When you contrast that, and small business owners, by the way, will say, yeah, I worked with one of these online lenders to get access to capital because above all else, I need it fast and I need capital when I need capital. But then if you ask them about their experiences afterwards, they say, I wasn't really thrilled with it. I don't think I got the best pricing. I don't think I got the best service. Like, it wasn't really a great thing, even though I opted for it. It kind of sort of the way I describe like eating a bag of Cheetos. Like, I don't feel great about having done that, even though like in the moment that was the thing I chose to do.
It sure tasted good though.
Yeah. It's really, really good, but boy, I don't feel good about that decision afterwards. That's mostly how small business owners talk about traditional access to capital through these digital channels. It is not, and maybe you can elaborate on this a little bit. It is not the way they talk about it through these vertical SaaS platforms, because the vertical SaaS platform, much like a community bank, knows them. It works with them every day. It understands their business. It has access to all of the data it needs to see, hey, you're good for this loan, but we can see how you might need it right now because you have to make payroll next week, or you have to, fund this gap in your cash flow. They have everything they need to serve those customers in a way that is both efficient, so it's fast for the small business owner, but also in the style traditionally of a community bank, it's personalized. It feels like it's a relationship. It doesn't feel extractive the way that first generation of digital lenders in the small business space felt.
I mean, it's so interesting because if you think about like the fact that the banks don't even serve this population too makes it even worse. Like,
totally.
Many of them that could go to the bank still don't want to, but those that don't have a FICO score would never even try because they don't think it's possible. But I think the customer stories here are the best examples of what's going on, right? Like, we posted videos on our website. Like, one of the great stories is Swella, where they had a braid bar. Like, they had one location in Atlanta. They're a Boulevard customer. They saw a pre-approved offer in the product, right? It says you are pre-approved for $62,000, I think it was. Click here to get it. Right. And you're like, okay, like, let me see what this is. You click on it and like Pipe has already received the data from Boulevard in an anonymized way in the background. We are 98.3% sure we will be able to approve that customer with that offer because the underwrite is done from a credit perspective.
Yeah.
The only time folks really get declined is when identity doesn't match and you get hung up in KYC, KYB. Right. So like that's another massive thing. Like, if you're showing offers and then declining, that's awful. Like, customers, it's just awful. Like most of these like lenders don't show the NPS or the net promoter score on declined offers because those aren't customers that they're serving. It's just customers that they pissed off. You get their hopes up and then you crush their hopes and it's over. And like, it's awful. And they don't even want to use your software anymore. Totally. And so because Pipe is 98% automated, like, thinking about that customer experience, they see it, they land on the landing page, they understand what it is, how the payments work, the data. Like, if they say, okay, that's interesting, I'll take it. Second click is, I agree to share, have like Boulevard share my data with Pipe. And then the application is completely automated. They don't have to type anything in. They just look at the data, done, great, click. That's the entire application experience. Like, you cannot do that in a bank with a piece of paper. It's just nuts, right? And so, and you get there and you say, okay, fine. Like, and then in 5 minutes, most of them are completely automated through KYC. Like, the credit was already done and you click to get the money by the next day. Like that type of experience cannot exist at a bank. Like, that type of experience cannot exist with On Deck because On Deck has to ask for all of that information. Connect your bank account. Give me permission to pull FICO because I don't know who you are. I need a FICO score, right? Pipe doesn't use FICO. Pipe doesn't use bureau at all. We don't use bank data to underwrite either. And because you're narrowing the problem to just the credit card transaction history, that's the only way to get to that automated magical experience. And so when a business owner is thinking, okay, I need some capital, I could spend weeks trying to get it here, or I can click here right now and maybe more expensive, but I'm going to click here and get it now and go buy the oven or go buy the truck. Like, Ridgeline's another great story. Like, the guy, veteran that got hurt and couldn't be in the military anymore, like, had a truck and like built a water drilling business, borrowed money from Pipe, bought a second truck. double your business. Like, it's just like those types. And he, like, his quote is my favorite. He said, like, what I realized is, like, the only thing that, like, is worse than having bad credit is having no credit. Right. Because he doesn't have any credit. Like, and so
sure.
like, it was just for him, he can grow his business and go faster. Like, all of these stories are amazing. And so, yes, it might be a little more expensive, but from the business owner's perspective, speed, ease, and fees is the order of hierarchy or how they think about it. And when you can literally just click on it, and it's a couple of click process, once you understand it, you're good to go. And then the second use, because we're multi-draw, remember, you can draw like 5,000 today, 10,000 tomorrow, 20,000 the next day. You can use it for those specific use cases you need. Pay payroll with capital, pay your bills with capital, use the credit card. Like, we have credit card offering now where the business owners can spend for free for a month, and they have 2 weeks to pay us back. If they don't pay in cash, it'll draw the line. So from a risk perspective, we can handle it for the first time. Like, that's the other thing I'm super excited about, is the card offering that Capital One and Amex cannot serve. We're talking about the banks. Let's talk about on the card side. Capital One and Amex can't serve them either. They're 680 plus FICO hard cut.
Right.
Ramp and Brex. You need $200,000 of cash in your bank account to get a Ramp or a Brex card.
Right.
None of these businesses have that. None of them. Right. And so for Pipe to be able to serve a Ramp-like experience for these like micro merchant businesses is going to be amazing. Like, it's going to help save them so much time. I love my Ramp card, but Pipe has a bunch of them because we have more than $200,000 in our bank account. Right. These small businesses can't get that. And so, like, that's that customer view and customer experience is why this stuff works so well. It's because it's just such an easy thing to go click, 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 and you're done. And the next time it's just one click, right?
No, I mean, that's exactly right. And I think that, just to add on to that, again, the nice thing about filtering this type of experience through these vertical SaaS companies, and we're going to talk about this over the course of the series, is it's being filtered through a really customer-centric layer before it's getting to this end customer, right? And this is always the thing I worry about with small businesses, to be totally candid, because small business owners are new parents who are stressed and not always making good decisions. They are very at risk of predatory offers, predatory products, right? Because
but this is why the brand that they're using is so important. Like, they trust Boulevard already.
That's right.
And when they see an offer from Boulevard, they know it's been vetted. They feel good about it. And it changes how they think. Like, you get double the conversion when you lead with the brand of the partner. When you say Boulevard Capital instead of Pipe Capital, it's like Stripe Capital. When people embed Stripe Capital and you get punted off to a Stripe Capital page, like, nobody knows who that is. And they lost half their conversion. So, but when you truly embed it and you provide the trust of the actual trusted software partner, that's everything.
Yeah. Well, and I think the benefit of that is that, you're riding on that trust because they are aligned in keeping that trust, right? Like, they're going to keep you and everyone else honest, right? Like, we are not, none of these vertical SaaS companies, including the ones we're going to talk to in this series, none of them are going to sign up for a product that is in any way going to jeopardize the relationship that they have with their customers, or really like screw up the overall sort of economic relationship, right? Like, it's very accountable, right? Like, these guys pay us a SaaS software fee every month for the holistic offering where we're solving their problems. If we add this thing in and we try to over monetize this one little piece, that could jeopardize everything that we built in this relationship we have with our customers. So I really like, particularly in the small business space, how accountable vertical SaaS as a distribution channel keeps all of these embedded finance offerings to the needs of the customer.
100%. Like, it's so interesting, as we built QuickBooks Capital, like, Intuit has billions of dollars of SaaS revenue coming in. Like, they can't risk that.
No,
it has to be a friendly, amazing product. And we were able to do it at Intuit and get to almost, I think they're getting close to 5 billion in volume now. It's insane.
Yeah.
But it's such a good product because retention goes up by 50%. As soon as you turn on capital. Growth doubles with Pipe Capital. Like, when you grow faster, retention's higher, all of that stuff is so much better. And you only ever maybe make 1 out of 100 customers a little angry because you had but it's because identity didn't match and you just probably didn't send us the data we needed. If you just sent us the EIN, we'd be fine. And so it's like not really our fault. It's kind of like they didn't get us the data to get through. You're not really making anybody mad. You're helping people grow their business. It's amazing.
Yeah. No, it's huge. So let's wrap up by just kind of doing a quick preview, I think, of the series, and then also like how we think this space is going to evolve over the next, say, 5 to 10 years, because really that's what we're trying to explore over the course of this series. How does vertical SaaS work? How does vertical SaaS plus embedded finance work? And where do we think this goes from here? So, Luke, I know you've been instrumental in almost using the series as a way to talk to the people you find most sort of interesting and compelling in this space, but give us a little sneak peek of what folks can expect over the next 5 episodes.
It's so interesting. Just like, I think we're going to see the nuance between different businesses, the difference between a restaurant owner and what the restaurant owner has to deal with, and the shift workers in those restaurants. Like, if you've never actually tended bar or waited tables or been a busboy carrying trays up like flights of stairs over and over again, like, you have no idea what those business owners in the restaurants are dealing with.
Yep.
And then we have like Cleo on the legal side. There's so much nuance in trust accounts, right? And like, how it's not your money, it's the customer's money, and you only get to pay yourself after the retainer's been earned, right? There's so much nuance on that money movement. And so it's not just the tasks that are being completed, there's regulatory things around it that make it even more complicated, right? And so I think the other thing that's going to flow through dramatically is, we also have like infrastructure partners, right? With Increase. And so we'll be talking about like the layered approach of how you actually can serve these customers. Like, we need Visa and MasterCard in the background. We need banks to do this stuff. But Increase is this amazing layer on top. And we'll talk to Dara Buckley that's done all those integrations. And Pipe could just call one API and in a fully automated, fully reconciled way can do all the underlying infrastructure, money movement stuff we need to do. And Pipe can then focus on capital and the experiences and the card spend management and the bill pay. And eventually we'll get to payroll and AR automation and accounting automation. We'll get to all of it, like all of the embedded financial, but like, Pipe doesn't have to focus on that infrastructure layer anymore. We focus in the middle. And then Pipe also doesn't have to focus on solving the tasks of the business owner. We just enable them with this stuff. So this layered, you'll learn more about this layered approach and like how all of us that are innovating across the space are making it faster to serve these small businesses over time too. I think another massive theme that should come out and will come out is how AI is going to change all of this.
Yeah.
Right. Like, Pipe is already using AI to automate our internal processes, right? We have KYC, KYB agents doing stuff that where a human would take 30 minutes to do a review. Mm-hmm. Now the AI recommends goes to all the research, recommends the response 30 seconds now instead of 30 minutes, right? Sales agents can call out and say, hey, we just need your EIN. Can I send you a text and show you how to upload it? Yes, thanks. Like, that's an AI agent on the phone now. You don't need humans to do those individual tasks. Like that, all that stuff's going to change for our internal business. And it's going to start happening also in SaaS vertical. So if you think about like a House Call Pro and a Boulevard, one of the biggest pain points for them is answering the phone and booking appointments. That should be an AI agent, right? Like, that doesn't need to be human anymore. It doesn't need to be a tool that a human has to use. It can be a thing that's more automated in the past. So each of the task pockets in these verticals is going to shift to AI automation over time. And that's going to cause massive shift changes in how, like, the faster these verticals can implement that stuff, that's so much time saving and like human time saving for the business owners. Like, that is a monster theme that we're just getting started with. And the next 5 years is going to see unbelievable shift change on that stuff. So I'm super excited about how AI can actually automate even more of these workflows. What else? Like, every person we talk to loves their customers and wants to help their customers. It's all product-led growth. They know that, and they're good at this, and they've created good products because they talk to their customers every day. And that theme is going to come through. The people care and they want to help, and that's awesome. And like, that's why we come to work every day at Pipe, is to help these customers. And we love our partners to think exactly the same way. Like, we're here to actually help these businesses succeed. And if they have that right mindset, that's why their products grow. Like, our partners are growing 40 to 50% a year, right? Like, Pipe gets that growth too. Plus we get to add new partners and have step function growth on top of that. But the best partners care about their customers, and you'll see that coming through in the conversations we have too.
Absolutely. No, I mean, it's I could not be more excited for all of these conversations to come, because, as you said, we're going to touch on a lot of very nuanced points about things that I don't think people realize about vertical SaaS, about these different segments of customers that need better software and better financial services products that are tailored to their needs. But it also is going to be paired with, and I know this sounds kind of cheesy, but like a real genuine, like, mission oriented approach to serving the market. Right. And I will say, I mean, and you used to work on the private equity side, like, there are corners of this industry that are very lucrative, but honestly aren't always a ton of fun to work in or even to cover from a fintech takes perspective. This is not that, right? This is a series that's going to focus on, we wake up every day trying to make these people's lives better. And the conversations really are going to be pretty incredible. I can't wait for folks to listen. Luke, thank you for sponsoring this series. Thank you for co-hosting it with me. You're going to be back on for the next 5 episodes with me, and can't wait to explore this topic in more depth.
Thanks so much for helping us do this. It's not an easy thing to put on all these series, but I enjoy every conversation. It's been so much fun. Let's keep doing it.
All right, sounds good.